the CEO of Prosper Trading Academy. He's standing by to help us make sense of it all. Scott, it's good to have you with us here this morning. Thanks for taking the time out of your day to join us here on the network. Let's dive right into the GDP numbers. Third read on the second quarter GDP. Talk to us about what you're seeing here in terms of the number and market reaction too.
Yeah, the number didn't change. It came in exactly at 2%, same as it was the first look and the second look. So, right in line with what was expected, really no market reaction whatsoever. The personal consumption number was down a tick. That one is a little bit surprising, however, still a very strong number. We know how robust the consumer has been. So even though that number was just down a tick, it's still pretty strong. So the consumer is still really looking pretty good.
Scott, talk to me in terms of jobless. That was the other number that we had this morning. One thing that I've been looking at is the strength in the labor market and how we're actually starting to see the housing market strengthen some as well. Looks like jobless claims came in here a little bit higher than estimated at 213,000. They were looking for 211,000. Prior got revised to 210. But if you take a look at that 4-week average, we continue to hold right around 212,000. Scott, I'm looking at the job market, and for a while I had been saying, the tax cuts just weren't enough to fuel housing, but with the strength that we've been seeing in the job market here, it seems like housing is slowly starting to play along with at this point. I mean, we've seen rates that have come off significantly as well. That helps things, but ultimately, the employment numbers are very strong and convincingly strong at this point. Again, probably feeding into what we've been seeing in terms of growth and also pointing our attention towards durable goods orders tomorrow and personal income and spending numbers as well. But for the most part, you've got to point to strength in the jobs here in the U.S.
No doubt about it. That's one of the real positive signs that we've seen, not just on a one-off basis or, on a month or over a month, but we've seen the job market really just sustain itself, which is a great thing. And to your point, Ben, I think that has really helped those housing numbers that we just saw. For the housing market in general, it's kind of been a little bit of a perfect storm with a robust job market plus those lower rates. So I wouldn't get too over the top, though. I wouldn't get ahead of the skis there with the housing numbers that we just saw. I'd still be a little bit skeptical because any sort of pullback either in the job market, any sort of pullback on the consumer, or if we start to see rates actually tick up, we could see those housing numbers kind of turn on its head.
Noted. Scott, I'm curious, I want to talk a little bit about crude oil. I'm wondering if this is going to add to or mute some of these crude oil demand concerns that we've been hearing about. I mean, I guess in some ways it doesn't necessarily tip the scales one way or the other with the GDP number coming in line with expected and some of the other eco data that we've been seeing.
Listen, I think with what we went through over the last couple of weeks with the attack on the Saudi fields, we've seen that crude truly is in this range, and it is going to take something just so extraordinary to get us out of this range of, let's call it, 52, 53 up to that 60 area. And we're sitting smack dab in the middle there again. And, we just got reports over the last couple of days from API and EIA saying that we're seeing builds again. And, that has put a little bit of a dampening on the crude market here. And, the demand is just not there, Ben. And I don't know what is going to drive that demand. We're past the big summer season, the driving season here. We're going into what is typically, historically, a slower time of season for oil demand. And I just don't see any bright lights ahead in the near future in the oil market.
Yeah, you're not alone. We've got a daily chart up here. We can see some of the weakness we've seen, and amidst some of the demand concerns and inventory increases you've seen, or you mentioned in the builds. Now, you also mentioned the recent disruption in Saudi Arabia and how that they've been able to restore production faster than expected. I saw a report from S&P Global Platts that said that plus the inventory builds this week, both from the API and the EIA. We saw larger than expected builds. We mentioned that. You can see why crude's been under pressure the last week or so after spiking up above 60. I mean, these are all sort of adding to some of the concerns here, as we were just talking about in terms of demand. And I mean, ultimately, we've got huge production as well here in the U.S. and with Saudi Arabia ramping things up again or getting back to normal levels sooner than possible. It all points to and kind of weighs on the crude as well.
Exactly, and barring any other sort of, God forbid, another geopolitical event or some sort of attack or anything, again, you just mentioned all of the headwinds here that the oil space, they're really experiencing, with Saudi coming online maybe quicker than people had thought, although, you don't really know truly what the production is yet, but, they say they're back online quicker than than they had expected to be. What is going to drive crude higher here? I mean, The demand is down. There's still all the concern about global weakness, global demand. And to me, if you look at the fundamentals in the crude patch and add in the fact that, record production, like you mentioned here in the U.S., I just don't see how there's any tailwinds, how there's any positivity in the near future here in oil, which, is not necessarily the worst thing in the world for consumers and for drivers. But, if I had to make an educated guess here, I'd say we hit the lower end of that range again, 52-ish, 52 and a half before we spike back up again.
Yeah, noted price stability is not a bad thing in theory in terms of economic conditions. Let's talk a little bit about how, a relatively small attack, an isolated incident could have such an impact in terms of production levels. Yes, we've mentioned a couple times how they were able to get production back online faster than expected, but I guess what I'm wondering is, do we have a false sense of complacency at this point? Should this have opened our eyes a bit more to some of the susceptibilities and potential weak cracks in the infrastructure potentially that exist?
Yes, I think it should open our eyes to security in all sorts of industry, not just the oil patch, but cybersecurity and the like, because this could just be, and I'm not trying to be oh my God, the sky is falling here.
Understood.
I mean, I'm a glass half full guy, but this could be just the tip of the iceberg. How easy it was for something like this to happen. So I think that is of some concern.
Yeah, and the fact that there at this point has really, aside from some sanctions, has been very little in terms of reprimand or retaliation. Scott, let's move on. Let's talk about tomorrow. Durable goods orders, personal income and spending. Any impact from these numbers on energies? I mean, ultimately, it's all kind of intertwined together, correct?
It really is, Ben, and all of the economic reports that we're getting right now, unless you see something that is just so far off, plus or minus here, the market is focused really on three things right now: the ongoing tariff talk, the impeachment, whatever is going on with that, and then really earnings season is going to start in a couple of weeks again. We've had a little bit of a lull, and that to me is going to be the driver for what's going to happen in the fourth quarter here. Earnings expectations have already been reduced. We know many companies have lowered guidance, so there's a let's call it a lower bar going into this earnings season here. And to me, I believe that if we don't see any worsening of the China tariff issues, we're going to see some companies reporting some very, very stellar earnings based on the lowered expectations. I think that could really catapult the market higher.
All right, something to watch here, Scott. We've got a lot going on. We appreciate helping us this morning sift through it all and help us make sense of it all, taking a look at inventories, some of the weakness we've seen in crude, and some key levels to watch. Traders, that's Scott Bauer. He's the CEO of Prosper Trading Academy, and he's bringing it here this morning.